So I've picked out a few things here that we're going to be looking at this afternoon. Now, this afternoon, after we've had lunch, we're going to be using Smart Center Pro, obviously, but we're going to be looking at all the futures contracts that are traded on CME. One of the things I like to do if I'm going to leave a position running is, and swing trade, is put in, using the platform, what they call a trailing stop. So if the market moves in your favour, the stop will chase the market, right, Marcus? So it will chase it up at the preset target that you want. I use 17 as a number in various currency pair futures, in the E-mini S&P. 17 that 17 tick thing is a really good number to aim at. And always put your stops on odd numbers, I tell you. I don't know why, but they gun for the round numbers, but they don't always gun for the odd ones. Now, let's have a quick look at the Aussie dollar trade. Now, as we know, this is the 1 minute chart, and we took a trade and it moved up to here, right up to 7716, didn't even get to 7720. So I'd already using the platform, a stop and chased the market, and I saw this come in. We all saw it. Supply hit the market. Now, sometimes that will get successfully tested in a bull market. In this instance, it's not the whole thing sideways, but it has not yet changed behaviour in the bigger time frames. Now, Gary, David Weiss used to talk about this, isn't it? Changing behaviour. It means which time frame's changing behaviour? Well, eventually they all will, but it'll start with the smallest one, right? And then it'll build up to the bigger ones. So that's why small time frames like 5 minute, 15-minute charts for intraday traders are particularly important. Now, another question I want to ask you all, what do you trade? Do you trade futures? Put your hands up if you trade futures. I just want to see. Stocks? Okay. Forex? Anyone trade that? One? Okay, so a varied amount there. A lot of people trade futures. Let's go and have a look at Smart Center Pro. Now, I don't think you've even seen this in action.
I've only seen it in Richard's office.
All right, so what we'll do, what we're going to try and spend some time on as well today is looking at how the principles align with the trend. And for instance, let's go to one chart before I actually use Smart Center Pro and show you something which you're going to love this chart, and you saw it when you see it.
Strength has arrived.
Okay, so I've got to stop. Now, what's just happened? All right, you probably heard the voice in the background there. Sign of strength arrived. That's Richard's toes. So what's happening here? Okay, so it's the Aussie dollar again. Okay, and it's a 6A. So what we're going to do is look at the different time frames and see where these are coming in. Now, basically, it's there. So, got a decision to make. Do I want to go in again, just at the lunchtime period, which can be very choppy? I took the last trade based on exactly that, and it worked. But this time, I'm just going to be a little bit more cautious. But let's look at the principle that's at work here, okay? 5 minutes.
Cautious at all.
I am pretty cautious, actually. I mean, one of the things I try to do, if I see a trade that's in harmony with the trend, especially on the smaller time frames, like a 5 minute, 15-minute chart, one thing you don't want to be is afraid to trade, right? At the same time, you don't want to overtrade. What you want to do is find the things that are moving. Do you agree with that, Gary? I mean, some people do. They trade like mad. Yeah. Wait. Yeah. So you've got to make sure you're finding things that are in harmony. So let's go and do some analysis on this. This one here. It's testing. It's testing just up here. You see these two high volume bars? It's exactly right.
Can
Ricky.
you draw a line across that?
No, actually, I'm not sure. Yeah, because I don't draw lines on this one. I use my one. Yeah.
Line.
Yeah, there it is.
Yeah.
Yeah. There it is. Okay, let's just put my pointer back on so I don't. Set.
There you go.
Okay, so question was, what's being tested there? Well, look, where's the ultra high volume on this chart? Can we just check everyone can see what chart?
Yep, I can see it.
Yeah, okay. Okay, so let's look at what's actually happened on this Aussie dollar. First and foremost, yes, Ricky, the answer is they're testing this area here where the high volume is. And they did it once and it failed. And I'll be honest with you, I thought that at this test point here, where the first test came in, that this thing was going to collapse. But it's still in a bull move. Okay, so they tested up here. These tests failed. What do we have here? Supply coming in. High volume. You talked about that. Clearly, some selling has hit the market. Now we've got a test.
Well, wait a minute. Let's go back to the point of supply coming in. Look how narrow the ranges are. Look how small the volume is. What's going on? Why is there all of a sudden so much volume right there? and the price is starting to drift.
Correct. Yeah. Can they all see the screen at home?
Yes.
You've checked that. Great. Good. No, the black bar that you're referring to would appear here at the bottom of the screen. What it is, it's a black box and it signals that supply and demand are coming into equilibrium, and it means the market's about to blow off. Now you're going to say, do we know which direction it's going to go in? Not at the moment, but we're working on it. It just tells you you're getting into a supply and demand situation. I'll see if I can find one for you in a moment. So look, we've got a test here, but I've also got to know, look at the volume at the bottom of the screen for the last hour. There's hardly any here. I mean, we managed to participate in this move, but basically it's gone very, very quiet. I've been watching all these markets. I don't know, is there any news out, Marcus, today or something? Anyone speaking? Or it went real quiet for, I mean, it was busy this morning and suddenly just over lunch it's sort of gone dead. But if we put up the scanners, if you left click into here, it will bring up the trends scanner here, okay? Again, you should be able to see that. Now, what do we notice about this particular scan at the moment? Would you agree that that's more bullish than bearish? Because it's green, yeah? So you can see here, for the last 4 weeks, we've been going up. Here on the daily chart, we've been going up. Here on the 4-hour chart, we've got 2 tests. Here, only a few hours ago, the reason I was looking for longs, let's see, do a test. Can anyone tell me what that signal is, 57? Some of you might have had VSA for years. It's a really good signal. It's a 2-bar reversal. And in an uptrend, those are the sort of things that you're going to want to look for, the reversals. Very powerful signals. You talked about that earlier, the reversal bars.
Right.
Here, 15-minute chart, clear uptrend. Now look what's happened here. There's your test, all right? But what's the problem on the 1-minute chart? It's coming down. So what would we want to wait for? I'd want to wait for these, at least 3 or 4 of those to turn green. Now I might miss 3 ticks, 4 ticks of that trade. What would you think of that chart, Gary? Do you think, looking at the screen itself, would you be interested in a trade right there, right now, or would you wait a little bit? Yep. 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 It's in an uptrend. Okay. You can see here it's in an uptrend. You've got that is actually a 5-minute chart. So that'll close. Yeah. Now we've got now we've closed higher. Question is now, I've already taken some money out of this contract. I want to see a little bit of volume coming in. How can we do that? I'll show you. When you use the Infinity platform, and you bring up your what they call the dome, depth of market, okay, the trading ladder as it's called. Very easy way to see if the smart money are becoming active. And I've not told people this publicly, but it's in here. Very easy to see. Okay, if you bring up the trading dome itself, all we're going to do is go to last. Right? Now, if I see loads of 1s and 2s going through, professional money haven't become active yet. Here's a little trick for you. When you start to see the 50s, the 100s, the 250s, the 25s, they'll come through like this over a period of, say, 3 or 4 minutes as they're going to move the market. Keep your eye on this very closely. Because what will happen is, at the moment, nothing's really happening. You can see it's almost dead. I've never seen it not even move, Marcus. I know it's not frozen. It's definitely working. But it's very quiet on all the currencies right now. Okay. Now, actually, looking at that, yes, I need to reset that. My other one, I need to reset it on there because it's trading correctly at 77.07 on there. Now, let's go to the 60-minute chart. Now, what do we notice about the trend of price, everyone? Is that up or down? What do you think? Does anyone think that's a down? No. But do we spot any unusually high volume on that chart? Massive. You can't not ignore that. That's absolutely massive volume. Now, this is why I'm very, very leery to go long again on this contract. Because I've got background now, right? And this background, okay, has come in the last 2 hours. So we were looking at this morning. So it's come in since the morning session. What they're doing here is marking this up, ready for distribution. So this could change behaviour. Well, what we mean by that is mushroom over. Now, the one I wanted to show you as well is that you look at this one. Look at that for a chat.
Wow.
Now, that is definitely weakness on a chart if you've ever seen it. Okay, it's a double. Okay, first and foremost over here, an up thrust. What is an up thrust? They're starting to distribute into this instrument. Okay, they're starting to sell, but they're not ready yet. This happens an awful lot on this particular contract. It's the 6C currency futures market. What happens over here? Look, this is exactly a perfect carbon copy of what you said.
Yep.
The market goes up to this area, but look at the volume. No,
Can't sustain it.
No, it's no demand. It's weakness. And the reason it's weak is because the selling has started over here, okay? And then up here, we've got no demand. And we've confirmed that that is the widest confirmation bar I've seen for ages. This would be a very good contract to trade. I've never traded the 6C, never, but because it chops around a lot. What do you think of that one?
Actually, I love it because you get this, it approaches an old top and it fails, and then you get ultra high volume on a widespread down bar. So that's, you know, that's your start of your climactic action, right? So fall, the price is going to start to fall.
It is. It's climactic. So
yep.
Look at this. If you took a line from there to there, you'd have a double top.
Yep.
Okay. Now, how would you trade that? That's a 15-minute chart. Now, I'll show you how you go down in a different time frame. If you start with the 5-minute chart, look for the unusual volume. There it is. Look at the 1-minute chart. Look how beautiful that trend is.
Which
Bang.
you never see on a 1-minute chart,
No.
ever.
That is the sort of thing you're looking for, right? Is the weakness to appear on the big time frame. And then what I do is I wait for these little dots, the diamonds, to change colour, which many of you already use, and down that we go. Now, going back to the 15-minute chart.
And you need 3 in a row to change it.
Yeah. What I look for, you see here on the 5-minute chart, I've got 3 of these red diamonds, or the dots. If they're in alignment with the relative volume and the medium-term trending system, which are these 2 things here, you can see the likelihood of it pushing lower is much, much more considerable. Mm-hmm. Any questions so far on that particular chart? That's weakness. That's what it looks like. Yes?
I expect that because today they announced the new interest rate.
Ah.
That's why I expect that.
That's what it is. Thank you, Victoria. Yes, you're from Canada, so of course you would know. You would be quite interested in that chart then, wouldn't you?
I wanted to see what happened at the beginning now. Now I see it.
Well, the trigger, there's a trigger number on this chart that I'm going to be watching very closely. Can anyone guess where that trigger would be? I'm going to draw a line on it, but you tell me where you think it should be. Where do you think the trigger should be, the trigger number?
I think it's under tools.
Yeah, I know that. Yeah, it's tools. Yeah, sorry. Tools. Horizontal line. There we go. Where am I going to put the trigger to short this?
It close that ultra high volume at what, 76.50?
Well done, Danny. That's right. That's the first trigger. Right? Right there. But now price action's already gone through it. All right? So there's your second trigger. That's it. That's my second trigger. Right? So now you've got 2 trigger numbers there. Now, if this here goes up on no demand there, okay, I can take a trade and place my stop somewhere up there. Because basically, this is going to act as serious resistance, that closing price. It's going to take a lot of energy to push the market through that level. But we're already down at this level right now. So I suspect, Victoria, that this is going to push up a little bit on low volume because there's a hell of a lot of supply on that chart.
Can you go back?
Yeah, we can go back.
I want to see the background.
Yep. So now this is good, you see. You can see where some of these resistance lines are. What Lauren's asked me to do is just to go back here. Just ignore that line. I'll just erase it. Hold on a sec. That's it. And you're going to see, look, there's the up thrust. Okay, the up thrust. That line that I just drew is right at the bottom of the up thrust bar. So the closing price is totally relevant to the bottom of that up thrust bar. So if you'd actually seen that up thrust and projected it out, you'd have had a very clear idea where that market was likely to go. Do you trade this, Victoria? Do you trade this particular contract, the 6C? Yeah. I found it quite choppy to trade. It sits and then suddenly it does this. It's like really, really, really fast. Now we've got something we can talk about here. Look, there it is. I didn't think I was going to find one today, but there it is. That is the little black box, and what it's doing is if you draw a line across the bottom there and from the top of that up thrust bar, the market's being squeezed or pinched. Yeah, so it's been squeezed in. When that happens, there's about to be a move, and of course we can see it. We know it happened. That was only on the 5-minute chart. Let me just put this up here. That's it. And so here, you can see the black box appeared. We had another one here, look. And there was the move. And that's only that's a 5-minute chart, so that's quite a significant upward movement. It'd be nice to show you one live if we can get one. And over we go. And there, boom, all the way up. And right now, we're approaching the trigger number, okay? So we're going up on very, very light volume, very, very slowly. So do you all understand what I mean by trigger numbers? Do you understand that you're looking at the ultra high volume bar and you're framing it out? That's what the trigger is. And it's very relevant to the future. This will play a part in the future. As the market unfolds, these two lines will become very, very important. Is there any questions from the... Okay, good. Right, let's go to the British pound. Right, let's put up Smart Sensor Pro. Oh, someone's looking out for me today. Look, that's quite...
What is it, half and half?
This is what we call that's the black box that I was referring to. I mean, they're quite rare. And suddenly, you know, it's there in the middle of a seminar, absolutely perfect. Now, we know we'd already taken a trade on the Aussie dollar earlier. We know we've got a test. We know we're in an uptrend on this particular instrument. Now I've got this black box. So what we want to do is go back to the Aussie and start to have a look what this is going to do. This is going to break out, okay? So here's our black box, right? Here's where we're currently trading at, 0.7705. My previous entry on this was very close to that. We can see where we're at here on this. What we've got, if I draw a line from there to there and from across here, can you notice that these bars are being squeezed? They're almost flat. See here? Hardly moved. That's correct. This is running live, so this is absolutely correct. The internet's fine for this. So we can see that they're being squeezed. Now, I would suspect just after lunch, which is when it usually happens in New York time. So what's the time here? It's 25 to 1, so it's 25 to 2. Probably 2 o'clock time, literally in New York time, you start to see a move on these charts. Because when you see these really narrow spreads like this, it's very suspicious. Yeah, I mean, I hate to say the word suspicious with being a former policeman, but I'm suspicious of everything. But there you go. But no, you see this a lot. That always got a laugh when I was called up to give evidence with Detective Holmes. Please come up to... Let me just read something to you while we're just letting that load. This is a great headline. This. What's it?
It was a 5.2 million barrel drawdown.
Okay. All right, just read this to you. This is Wall Street Journal. Jesse gave this to me yesterday. It's quite funny, this one. It says, the headline is, the dying business of picking stocks. So they're saying, you can't pick stocks. It's a dying business. I'm like, no, it's not. But then underneath it sort of gets it even perfect. The headline here is, doctors really do believe in the bad moon rising. Hospitals brace for lunacy, psychotic patients, and a spooky birth, whatever that means. Underneath that headline on the front page of the Wall Street Journal. What on earth is going on? So, we're back up and running with the dome. Can you all see that? Yep. Okay, good. So let's just put up the 6A contract. Can you see if they can see that at home as well for me? Okay. It's dodgy. I'm a bit worried, Marcus, about taking a trade, a real trade with that, if that's going to drop out. Anyway, let's wait and see. By the way, just so you know, in these instances, if we have a dodgy internet here, I use my 4G on there for that, and so I'll have a backup. If I take a trade and I decide to do one, that will be backed up. So I've always got a plan if something happens. The other thing, Marcus, something's important. You guys are great. If we get you on the phone, yeah, you can manage the trade for us, yeah? Yeah. Well, you can manage the trade from there now then. Okay, so here we go. What we'll do, we're going to look at the last put that auto center on. Move that down to there. It's fiddly this, there we go. Got it. Okay, right. So, have a quick look. 5-minute chart. Here's your test. Successful so far. Market's holding the level. I would be very shocked if this doesn't break out to the upside again. When you see weakness coming in, followed by testing of that weakness, that is potentially very, very bullish. Okay? So always remember, yes, you'll see weak bars, that tested bars. Would you agree with that, Gary? Do you trade the weak bars that get tested in an uptrend? Would you take a trade here now? Because you said you...
Isn't this the same line we were looking at?
Yeah, it's the Aussie. Yeah, it hasn't changed. It's just a 5-minute chart. We were looking at the 1 minute.
Yeah, it looks, you're getting a little less volume on that last swing up, but
Yeah,
I
here.
still think you've got, this is a sweet spot in a trend.
Yeah.
And, you know, I could always go against you, but most likely what will happen is it's going to retest the high at a minimum. We watch it as it went up there if we went long, and we want to see you try to break through that to a new high on the day.
Yep.
I don't know, the currencies, how do they trade in there?
Well, it depends. Gary's just asked me the question for you, those of you on the internet. How do currencies trade in the afternoons? It is really hit and miss. Being a Wednesday, usually the reason we did this on a Wednesday is you get some really good moves on a Wednesday. But it is hit and miss. Again, we have seen some good moves in gold. I'm going to do, this afternoon, we're going to do a detailed analysis of the gold market and a couple of other commodities markets. And I think lunch has just arrived as well. That's good timing. But yes, what we tend to find in the afternoons, Gary, is that the British pound will trade really well around the London fix, which is about 10 a.m. Chicago. Then it'll go quiet, and then right at the US at the close, boom, big moves. Okay. Okay, I'm just looking, guys, at the Dow Jones for a second. I did see quite a few orders coming in here. Everything's doing this right now. Everything. Ones. When you see that on any of the futures market, it just means there's not a lot of activity right at this moment in time. There's just not a lot of activity. So if you're going to take a trade, right, you really want to be seeing the market moving rather than just, otherwise it's just going to go up and down 3 or 4 ticks each side of it. Now, let's just see if there's anything else on Smart Center Pro for the moment. Bless you. Okay, so we've just something for you to know. We've already seen that there's a test here on Smart Center Pro. We know it's in an uptrend. We know it's pushed up three ticks now. So yeah, Gary's right. It's pushing up a little bit, not very much, but it's picked up the test. I want to now know if we get another test on a different time frame. All you're going to do is uncheck that box, and it's going to put a line through here. Right click here and click on Restore Instrument for Scanning. That's now working again in the market. And what you might hear, it'll probably in the next minute, you'll hear a voice, my business partner's voice, come in saying, trend alignment to the upside has been found. So it's going to tell me that all the major and minor time frames, apart from the 5 at the moment, are pushing higher. All right? Now you can see very visually here, I'm going to ask you, look at that, just as I pointed at it. Now, do you see that? I'm not doing that. That's the software doing that. It's a black box flashing. What it's telling us, that's on the DAX.
Trend alignment to the upside has arrived.
Did you all hear that? So it's picked it up. What we're going to do, we're going to click on the black box, and it's automatically searching for no supply, stopping volume, key principles to go long in the market. Here, this one, if I left click, it should automatically select the green box because the weekly, the 8 hour, the 4 hour, the 15, the 5 is up. Left click the box, done. That's it. So now what it's telling me in the futures markets at the moment is that This particular one, the Japanese yen, we've got 2 grey boxes, 2 green boxes, 3 red ones. That means the market's in congestion. Probably not a great thing to trade. The euro, exactly the same picture. The 6C, same picture. All of these are showing us a very gold. I would say gold has the potential for a short trade today based on the 3 smaller time frames. So if I want to automatically search for an upthrust or something, I don't click on the box, I click on the red because I'm looking for shorts. Is that clear? So I'm not, that hasn't found anything yet for me to trade, but because I can see that the 1, 5 and 15 are negative and so is the 8 hour, it could be potential for a scalp to the short side. So you can go and look at it, go to gold. Okay. Actually, this is quite nice. This is a nice chart to just finish on before lunch. Right, we can definitely see we've got candlesticks on this chart, and the only reason I don't trade with candlesticks, but I'm learning a new strategy for VSA which involves candlesticks and something called the hammer. Does anyone here trade candlesticks? Just out of interest? Have you? Yeah, I haven't studied them, to be honest with you, but I'm just getting into it now to see if there's validity, and there does seem to be with the VSA message. Now, right at the top here, right, we clearly come up. There's, well, as Lauren's already told us, a very popular signal in the software, supply coming into the market, all right? Now, I can definitely see here that we've got a change in behaviour. Okay, we can see here, change in behaviour. It doesn't look like the pen's going to work there, but... So we're definitely heading down. Now, as we're heading down on the 5, we look at the 15-minute chart. Do we have any weakness in the background? Yes, we do, up at the top here. Okay, so let me ask you a question. What type of signal will I be looking for to start to look for shorts on these charts? What's it called? No demand or upthrusts. That's it. No demand. No demand is the most common one. The trouble with the upthrust is if you've already gone short, you know it, you've already gone short and you think it's making money and suddenly it shoots up and you see the upthrust, you go, I don't want to get back in now, I just got stopped out. Happens to me quite a bit. So don't worry if you ever get stopped out by an upthrust because that's its job. It's a money-making manoeuvre. Okay, let's go back to the Swissy now. Question for you. Yes or no answer. Do you think that's tradable? Yes or no? Does anyone think that is a tradable contract at the moment? Good. Gary? That is one of those things where you've got your black box that's appeared. Okay, it's a 5-minute chart of the Swiss franc today. Look at the colour of the diamonds. All right. If we want to come up and look at what the scanner says for the 6S. Further down. Here we go. That's what I call a mess. It's green, it's red, it's grey. That is a very important thing to show you here. It says do not take a trade here. Under no circumstances will you trade that market because there's no alignment. Okay, all right, we'll have lunch in about 2 minutes. Let me just finish up here. So that is telling us no trade. Okay, now we want to find something to trade right now, okay, today. So the only candidates that I can see at the moment that would be tradable, potentially the gold, potentially. The British pound, gone into congestion, but it's already warned me that the weekly and the 8 hour are negative, the 60 and the 15 are negative, potential. I'm going to go through each of these now. I'm going to ask you all, trade or no trade, based on what we've talked about so far. So the one at the top, trade or no trade, do you think? What do you think? I'm going to say potential short trade. Why? What colour's the minute? Red. What colour's the 5? Red. What colour's the 15? Second biggest time frame, what colour is it? Red. So the smaller time frames are starting to align with the big one. So you need to be aware of that. Okay. So if I want to find a principle, left click manually. Okay. We already know that the DAX says long. Okay. 6J, trade or no trade right now? What do we think? Trade or no trade? It's definitely no trade, okay? Because on this one, this hasn't turned red, it's grey. You've got green here contradicting the weekly and the monthly here and the 8 hour and the minutes grey. That's just saying, don't touch it. What about the euro? Trade or no trade? What do you think? Anyone hazard a guess?
No trade.
It is. It's not, and that's no trade. The Nasdaq as well, I'm afraid. Canadian dollar, nothing going on. Nothing going on. Palladium, nothing going on here. Now, gold. We already know that we've got 3 of the shorter time frames aligning with the red one. So that is a potential for Smart Center Pro to find for us. Now, let's give you another one. What about that one? Trade or no trade? ZC, the ZC contract.
Yeah, potential trade there.
Well done. Well done.
Why did you go past that?
The HG contract? Yeah, that's the, sorry, I missed it, but you're absolutely right. It's an easy one. It's an easy answer, that one, isn't it? Look, that's definitely a potential short because the 15 isn't aligning, but these are. And remember, this is dynamic. So if we see trend alignment on the 15, that will turn red. And then you'll have total trend alignment in copper. So it's a good point. Same with these two. Okay, this has turned red. That 1 minute chart here, if that turns red, we're going to want to know about it. Now, here's another interesting one then. What about the Dow?
Yeah.
What do you reckon?
Yeah.
Potential long? It's against the big trend at the moment here and here, but it's starting to push higher, right? So you've got the forward. So I'm going to go and we'll do some analysis on this after lunch because I don't want it to get cold. But here, 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 and here, definitely potential for a long trade. So I've manually marked that in. As soon as we get a principle in VSA telling us this strength, we'll be able to take the trade. What about natural gas?
Essentially, yeah, it's only a 5 and a 1.
You got it. That's it. The answer here was that's a potential yes, because actually you've only got the 5 and the 1 minute. You've got the 5 minute that wants to line up. Look, now the 1's already in, so there it is. Definite. The rest of these, I would say not ready yet, because all the small time frames are grey, and grey means neutral or no real movement in the market. That is it. That's what this product does, and it's going out and searching. Now, we won't get into the details of all the different parameters because we did that on the last webinar. Did you all manage to attend the last webinar we did? I think most of you were there, but it's all been recorded, so you will get the recordings. Richard, has everybody got them in their account now? There's a couple of customers said they haven't got them, but they're in there, are they? Could you check for us?
The videos I have, I don't have all supporting documents.
Oh, Richard, the supporting documents, we uploaded those. Just the videos, was it? Okay, I'll have to upload those later on. I'll do that. That's not a problem. Yeah, Dan.
I'll run the scanner in Trade Station.
Sign of strength
Get
has
any
arrived.
information in terms of, is that a feature that's not there? You know, not when you go over the little triangle.
You mean in here? You mean?
In Trade Station, no, in Trade Station. If I aim to go over any of the explanation, it doesn't bring anything up.
Ah, CAJ. That's easily fixable. Yeah.
Okay, cheers.
That's why I brought you. I wouldn't have known the answer to that because I don't use Trade Station. I use Infinity. But there you go. What have we got? What's just happened on the Dow Jones, everybody? As we're just about to go for lunch, and my wife's going to kill me if I don't get you to lunch quickly. But look, the YM, very quickly, we know we've got an alert. Okay, first and foremost, we're going to look at the Dow. Okay, what have we got? 1 minute chart. I mean, we need to check the internet markers at half time here, but that's a potential long trade for me. Yeah, a little bit of weakness here, but no, that is one I think we could definitely trade. Here's the previous reversal bar, right? Strong sign of strength. By the way, always search for reversals. You can program Smart Center Pro. I haven't done this one yet because it's only been recently installed, but you can program it to look. Is right, AJ, for specific numbers of indicators by number. That's what I'm saying, in the scanner. Yeah. So and it'll alert you when that particular principle's appeared. I'm going to do you all a list of indicators of the top 20 for strength and weakness that you can program in. You don't have to put them in if you don't want to. Remember, if they're in there, you're going to get a lot of alerts. Some people like that. They like to see. So, for instance, the reversal over 2 bars is a serious sign of strength. you're going to want to know that that's appeared. Because what happens is a 2-bar signal. The first bar falls on massive volume, as you can see, with the second bar being immediately reversed. And what it does, it catches all the shorts in here. But when it's in an uptrend like this, often you'll see that tested. It hasn't happened.
Strength has arrived.
Oh, it's all typical. We're going for lunch and now it's all happening, look, isn't it? Right, just very quickly then, it's back to the Aussie. All right. Again, it's not moved though. It's nothing. That black box is still there. I guarantee the minute I say, let's go and get some lunch, boom, it's all going to happen. But that's fine. So look, let's reconvene here at about 2:15. We're going to do some bar stuff, getting into the actual prints, because quite a few of you have asked me questions over lunch, which has been quite useful because it gives me some more ideas. Now, Aussie dollar, not really doing anything, is it? It's went up to the 7-11. I mean, again, situations like this, very thin trading, we suspect it's to do with the fact that Trump and Hillary Clinton are speaking tonight, and that's why it's gone fairly quiet. But anyway, let's first of all do a complete scan, okay, using the Smart Center Pro. Now, we have got alerts that have come in while I've left them running, so I haven't reset these, okay. So the alerts we've got at the moment: British pound, natural gas, which we said we thought we might have, the Dow, which is interesting, gold. Yeah?
Explain resetting, because I had a question about that earlier.
How to reset the scan, so it's... Okay, if you want to reset all the scans, you can right-click in here, restore all instruments for scanning, and that now resets the whole lot. Okay?
And why did you do it, though?
Well, you do that because...
Trend alignment to the downside has arrived.
There you go, there's Richard's dulcet tones. There you go, trend alignment to the down. Because the market's constantly changing. If you don't reset it, then you're going to miss the trade. If you just let it run and just say, oh, I'll leave it flashing, you're going to miss the next trade setup. Now, there's one right now, look, on the British pound. Okay? Something we are going to add to this is, over the last few weeks, you all know Tom Williams has not been at all well, but I've been recording with
Trend
him.
alignment to the upside has arrived.
I can't get away from my business partner at all. Like, even he's there all the time.
It made my dog bark.
Make my dog bark. Interesting enough,
Trend
I've
alignment to
recorded.
the upside.
You see, you can see all these going off now. Yeah, you see them all firing up now. And some of these may be tradable, I don't know. But we've got Tom Williams now for the different principles that appear, giving you a voiceover from his view of what he would do in that situation. So I've got 50 wave files. I'm touch wood. I'm hopefully going to get another 50 so we can complete it when I go to see him next week. So now we've now got trend alignment to the downside on the British pound. And what it's done, look, it's said, I can see the two biggest time frames, which it wants, it's the most important, a negative. We've got one green one, but in the settings that I use, I've set it to say, allow for one missed, you know, it can be grey, it can be green, because now I can see the 60, the 15 and the 1 are all going to the negative direction. So we want to find a trade. We left, just like we did in the Aussie dollar earlier on, we left click. That's now set to find, now it's interesting today, since we've been running it, we haven't had that many. We've had 2 tests in the Aussie dollar, and the one trade that we took earlier on was that setup. So if you've got a test in a rising market, for instance, which is one of my favourite principles, and you've got a shakeout in the background, the most important thing, Gary, I think people have trouble with, you probably need to come stand here with me because we're on the internet here. Someone asked me at the break, you talk about background. What do you mean by background? How many bars? Is it 50? Is it 500? Is it 5,000? Is it 5 million? So the question is, when you're looking at background on a chart for your benefits, how many bars do you look at when, just for you personally, because it will differ for different people.
137 and a half.
Yeah.
Now, there's no answer to that. There's no fixed number. You want to look and see what we call it a Wyckoff story, okay? Put up a chart and let's just do a story.
Okay,
well, any chart.
I'll do the one I was going to talk to you about anyway, because I've been asked to do this, which is the 4-hour chart of gold, right?
Okay, so this is a good chart. This is fine.
This is a good chart because there's a clear principle on here as well.
Yeah. So you have here, if I'm looking at this, I don't know how many bars there are on this chart, but we start off on the left-hand side. I see we had a trend to the upside, right? And Suddenly, then we go sideways a little bit. I see supply come into the market. We didn't talk about this, but I'm always looking, and Wyckoff always looked at the waves of the market, okay? And the waves are nothing more than the swings. So I would, what happened to that little thing here that we were using before? Can you guys see? Yeah, perfect. So I've got a swing up, and that's a distance. And I don't care about the exact numbers, but we're swinging up here. And then I have a swing down. Okay, everybody see that? So the swing up, can this work?
I don't think it doesn't draw. I don't. Oh yeah, it does for you. It didn't.
Hey, look at that. Okay, so I have a swing, and so I've got a swing up, and I'll even do different colors for you guys. Yeah. And I have a swing down. So is the swing up larger than the swing down? Obviously it is, right? Okay. So this is how I look at the markets all the time. So we have another swing up. I'm just going to kind of eyeball it, okay? And then a swing down, and I'm going to just switch over to one color now and do this because I think you get the idea. Let me change the color to blue. Okay, so we have a swing up, a swing down, swing up, a swing down. Notice how this changes. Suddenly, my upswings are less large, are smaller than my prior upswings. Okay, and then I have a downswing. The downswing's larger. Okay, so this upswing shows a change of behavior.
Right.
And this downswing confirms it. So now I've got a change of behavior. So now I've got weakness in the market. We go sideways here for a little bit, and I can sort of see that kind of necking into maybe a little apex or a hinge over here.
Let me ask you a question.
Yep.
If you get this right, I will buy you a gin and tonic. What signal do you think marks the top?
That's got to be an end of a rising market.
Would you like to click on it in a minute? We'll have a look.
Yeah, we'll take a look. It's got to be, right?
Let's have a look. You have a look. It's a signal that we know. Just click on the Razor drawings, click on the button, and click on that button there, and you will see. Because I did a trade alert. So who did you get? Some of you got this trade alert.
Look at that. How do you like that?
All right. So yeah, this is a trade alert that I sent out, and I remember when I sent it out. I mean, it initially I saw as you said, the big swing down.
Yep.
And I phoned Tom. I said, you've got to look at the gold chart. I said, it meets the criteria perfectly. I said, the volume on it, though, Tom, it's not ultra high. It's just very high. He said, that's good enough. He said, is it into fresh new ground? What he meant by that, was there any price action up to the left? No, there wasn't. No. Is there an uptrend behind you? Absolutely, there's an uptrend behind you. Is the spread narrow? Yeah. Did the next bar close lower? Yeah. That's the end of a rising market. And I've got other examples, and that scanner finds that signal. And that marked the top of gold. It collapsed straight after that. Now, you'll notice that when you see that signal, you get these principles coming in, right? Mm-hmm. So they mark it back up to try and fool you before resuming the trend. And if you look at the bigger chart now, it's quite interesting. You can see what this did. I mean, look, that's a very substantial negative move.
Yeah.
So you were absolutely, see, I promise you I hadn't spoken to Gary about it. You haven't seen that chart.
No, I never look at gold.
You just know.
Yeah. So let's see what happens here. So we go up. We can't make a new high here. I'll see you.
No, you've done it.
Yeah, we did it. We break down here. That's a sign of weakness in its own right. Okay. We try to rally up. We get a little upthrust in here. Not an upthrust from a Wyckoff perspective, but one of those nice sweet spots in the trend right in here. Right. So this is a story starting with the end of the rising market, a lot of no supply up in here, no demand up in here, inability to rally higher, waves larger to the downside than the upside, and then breaking the support level that exists over here. And I'm sure if we look, we got volume coming into the downside. So this is a story. This is what I call a story of weakness, or a story of supply. And so until that changes, I want to be on the lookout for short trades. All right, and one occurred here, and you got
That was
maybe-
actually when I took the short, just after
You took the
that
short, yeah.
Right.
So now you've got the scanner that's doing some of this, not exactly in the same way that remember, I'm old school, this is the new school stuff, right? But the two go hand in hand because they're based on the same thing, and you've got some nice, and so okay.
You can see what happens. This is a gotcha bar. We'll call it a gotcha bar, right?
Yeah,
Now,
tell them about that. That's good.
this is a gotcha bar. What it does is basically, if you took your line across here where the support was, because gold tried to rally, it hit loads of resistance, and I was looking for the breakdown in price. So this is a trade setup that's going to be here this week. It'll happen. So we can see that's the highest volume on the chart. It's got a green indicator on it, okay? Climactic action, which it is. But if that was all buying in there, and there's an attempt to support the market, but the next bar closes lower, okay? It's a shakeout bar, okay? Now it's interesting, that shakeout is on very light volume, but then the clues or the market's telling us a story here, because we know it's trending down, and every time it's trying to go up, we're getting what we call confirmed indicators. A confirmed indicator is when it's solid red. Now this is a 4-hour chart. So if you'd seen in this downtrend with this big trending system red, and you get no demand confirmed on the 4-hour chart, okay, go on, yeah, that's it, it's weakness. And it comes all the way down to here where they support it temporarily, I believe, right? Quite a bit of volume comes in, and they hold the price up, and then today we go up into that same area with supply coming in. Now, if I drew a line across here, you'd see we're right back up to the low of that bar, and that's significant, because to get through that bar, we'll need an increase in volume and a surge in volume. But what I expect to see on the smaller time frames is no demand bars. So we go down to the 60-minute chart and we say to ourselves, right, today they've marked it up. It's a clear markup. Would we want to be looking for shorts in that sort of market? No. So we look and say, look, I'll tell you what we're going to do. Let's ask Smart Center to have a look at it for us, and we'll look at the trend alignment. And remember, that's what Wyckoff talked about. You go with the path of least resistance, right, Gary? You're looking for...
Absolutely.
So now look at what the story is telling us. I always like to use Gary's analogy. I got it from his. David Weiss says it as well. You're looking at a story, a picture. So visually, I used to have to look at all the different charts to find out what trend we're in. But when we developed this scanner, which links into the Smart Center Pro, what it does is it shows me that we're in congestion, right, over here on the weekly chart. But look here, I've got no demand. And I think I'm right, AJ, am I right in saying in the later version of this, you can highlight this and it pops up with the name of the indicator, because I think I've still got the older version.
I think that's right.
You're running the click on the
Oh, no, I'm not running on the one that you just installed for me. This is a separate computer. Do I click on it?
smart scanner code running, right?
Oh, there. Oh, I didn't even know that myself.
Wait, it's running. Just wait.
See?
There you go.
CEO of the company doesn't even know that we can do that. Look, you can click on an indicator now and you can see. Now, this is a great opportunity. Yeah, you've got a sequence here, right? Now, how many of you have read my second book where it talked about sequences? Yes, Laura, you haven't read my second book. You haven't even read my first book. You're trying to get me to write my third book and not having...
Flashcards out of your second book.
When I talked about in the book sequences, when I first met Tom, he showed me the software with all these numbers in it. I said, well, crikey, you got over 200 indicators. I said, and it's ironic. I said, look, no demand. You've got 14 different types of no demand with different numbers. And he said, well, that's correct. I said, right, but surely no demand is no demand. And again, he goes back to the leaf on the tree. Well, that no demand indicator 199, it's got a slightly bit of different code to 198. Okay, that's why it's got two different numbers. So I said to him, well, look, you talk about ultra high volume. Let's talk about weakness. Ultra high volume on an up bar being weak. He says that's correct. And then you say low volume on an up bar at the same level is weakness. That's correct. I said, how can it be both? And then I realized what he was telling us. The distribution phase, as Lauren very nicely in her presentation showed us, starts with something happening, massive volume. That's the warning sign, something's happening. Then the market makers they can't just have the price collapse. It happens very rarely. You'll very rarely see a market, unless it's the end of a rising market, that often does that. But you'll very rarely see the market just suddenly fall, because you've got plunge protection teams, all sort of thing going on. So what happens is it drops and it starts to go sideways. Then it goes back up to the same price level where the massive volume was. And as it goes up, there's hardly any volume. And the people who are participating in that low volume is the herd, the group. The professional money, the smart money, have withdrawn interest Because there is no demand. Because they've already sold short here. So if you've got supply present followed by no demand, no interest at that level, only one thing's going to happen to price, it's going to drop, which it invariably does. Now, in this instance, we know that we've got the end of a rising market, but I also know here that I've got a sequence, and the sequence starts with high volume, and it's completed by low volume at the same level. And you can see on the chart, if we look at this 60-minute chart, how that works, okay? Here's the first part of the sequence, okay? And down here, sequences. All of these are sequences. Here, the test, the shakeout, the test, and then up here, even here now, at the right edge of the chart, the sequence is here. There's a selling climax, a test, sign of strength 23, sign of strength 23. If we put the scanner manager back up, we know that we're in a mixed bag at the moment, but that sequence has been enough to hold price up. And remember, that's an hourly chart. So after that sequence completed, we've gone up a couple of dollars. Not much, but enough to say that sequence was relevant at that point. But I don't think gold is going to go very much higher. And the reason I don't think gold is going to go very much higher is because of what I saw on the weekly chart. Now, I'm using candlesticks here because I'm testing something. I'm testing a theory that a customer showed me about hammers, right? The hammer. Well, you can see some examples. Do you ever use candlesticks, Gary?
No more.
Now, and it's interesting that what we see is a sequence at the top here, which was the trigger for me to send the trade alert out to our trading the markets customers. Now, we have two non-confirmed indicators here, right? Because the next bar's gone up. So they're clearly marking the price up. But you've got some supply coming in. So basically, the software's reading that they're starting the distribution phase here. They're starting it. That doesn't mean it's completed. They've started it. And it's an old top. There was an old top to the left. Look, remember, this is a weekly chart now, so every bar's a week. Look at the shape of this that Lauren talked about. All right? Look at that mushroom.
Gorgeous.
It is. It's a magic mushroom. And you can see here a beautiful example, because there's an old top to the left anyway, that professional money, the smart money, must be beginning to unload some holdings that they brought at lower prices. Now let's look at the sequence of events that happens. This is called a two-bar sequence. Now the first bar here, up into the previous area, is the same indicator, but this time it's confirmed. Do you think on a weekly chart that is a very important principle to look out for? One of the most important. That's as good, that signal, 159. You don't see it very often. That's as good as end of a rising market. We can see the swell in the volume. Okay, we don't have to look. We can see, look, as it's marked up, we get very high volume. That's the highest weekly volume that we see. The market's got an uptrend behind it. Everyone that I saw on television who were the analysts on gold were forecasting this like they did in 2000. It's going up. It's a safe haven. And the stock market had a decline. And so what happens? It's just a simple process. They're saying, look, we'll get the idiots to buy gold up here, and we'll shift our gold. And then what we'll do is we'll tell everyone to get rid of their stocks, and we'll buy them back. That's how the game works, the game on Wall Street. Now, let's look at how we complete a sequence here. This bar here is no demand. It's no demand where there previously was high volume. You've now got very low volume. No demand, in this case, at a market top. It's a very strong principle. If you just took those two principles away and searched for them on weekly and daily charts, right, Lauren, you're nodding?
This is, I mean,
this,
also, you're also saying, look at the no demand, and then what happens? It gets confirmed, and then it goes back down to the start of the climactic action.
Let's read what Tom Williams says about this. He says, it's an up bar with volume lower than the two previous bars, shows lack of interest as the market rises. Study the background carefully. This indicator works best when there is weakness in the background or following a sign of strength in a downtrend. Is there immediate weakness in the background? Well, it's over here. It's a double top. So that still counts. It's weakness, it's in the background, and it's there, okay? Future. The next bar should be down to confirm the indicator, right? What does that mean? It means it needs to close lower than the indicator bar itself. In this case, it is confirmed on the weekly chart. So now, if you're a trader looking to get into gold, you've got everything you need to start looking for short trades. Now, over the last 2 weeks, I've been positioned short gold on several things, because the reason was this. This bar here took a whole week to fill. Right? Now, can you imagine what a 5-minute and a 15-minute chart looked like when that thing collapsed? Full of no demand, up thrusts. So when you look at these market tops like this, often, if it's to do with a stock even, you get very bullish news, and you will turn on CNN or CNBC, whatever it is, and the analysts will be telling you that everyone's buying gold because they don't know any different. I was interviewed by Bloomberg in Bulgaria, and they wanted me to do a speech and everything. When I showed them what I was talking about, well, they said, that's a bit too complicated, because we're telling everybody when the price goes up, everyone's buying. I said, but that's misleading, as I'll show you. And the presenter said, well, can you simplify it? I said, no, they're selling and the price has fallen. You can't simplify supply and demand. It's either right or it's wrong. And he said, yeah, our viewers probably won't understand that. I said, I understand, because it's contrarian. I'm telling you, all your pundits are on the TV telling us you're safe, you're protected. Everyone's going, and they look good. Because I remember the 2011 rally in gold. And Goldman Sachs came out at the end of August and said, actually, I want to show something. They came out and they said, we've just had a look at the gold price. We looked at the bullion thing. And I think I don't think I've got it on the monthly chart, but they basically, the analysts came out and said, we're forecasting $2,500 a troy ounce of gold. Okay. And silver could go up to $60 a troy ounce. Now, if anyone knows anything about silver, it's the most manipulated metal in this around. It's very manipulated. Did you know that in 1981, silver was trading at $49 a troy ounce, and the Hunt brothers, if you've ever heard of them, had cornered the silver market, yeah? If I told you that here at 2016 in the CME, we have never broken above $49 in silver. So now I know you're looking at me like that as though everyone doesn't believe me. We've never gone above that level. And the reason we haven't, right, is it's trading at 17 now, is the smart money about 3 years ago, if you looked at the chart, decided they were going to take down silver again. And a guy called Maguire went off to the NFCC, I think it was, and said, look, this is where they're going to do it. And sure enough, it went just a couple of cents below the 1981 high, and then it tanked. And there's another one coming, another silver, potential short trade coming, because they don't want silver and gold indeed to go higher. Why do you think it is that a few years ago they've been preaching about the mirror, I think it is, which they're going to change, getting rid of the dollar, and this was all over the internet. And people were emailing me, Gavin, you're terrified, the dollar's weakening. And I'm like, hold on a second. I've just looked at the last 6 months of the dollar, and I've just had a 30% pay rise because I get paid in dollars versus pounds, and I live in England. That's not a weak currency. That's not a currency that's about to disappear. And when you look at the chart of the British pound, you can see very, very clearly on the chart of the weekly chart why this market is going to continue to fall. It's the same principle. Now, one of my other favourite signals to trade, again on the bigger time frame, is something called a trap up move. I don't know if that was a Wyckoff term or whether that's a Tom term, Gary. Trap up move. And it's one of those signals that, in this candlestick example, I was told to look for engulfing candles. Does anyone know what these are? Engulfing candles? I know Jesse's seen them, yeah. This is where the bar behind it is very narrow spread. And then suddenly, this is the weekly chart, bang. Now, obviously, you probably all are aware that our lovely country, Great Britain, is going to leave the European Union, apparently. But nothing's actually happened yet. There's a lot of talking, but Article 50 has not ever been introduced yet. But everyone panicked. And on that day, and on that week...
Sign of strength has arrived.
Okay, we'll have a look at that in a second. That's on the NASDAQ, and I'm looking for a long on the NASDAQ, so yeah, it's too late. But anyway, there it is. That's what they do. The futures closes in 15 minutes. I don't trade the last 15 anyway, but we'll have a look at it. Here's your trap up move, all right? And you can see that signal causes the market to collapse still. All right, and every time we come down, this is what Wyckoff talked about as well, that bearish volume is increasing volume on the down bars and decreasing volume on the up bars, right? And that's what our trending system that you're looking at under here is measuring. The volume thermometer is measuring the bullish versus the bearish volume. So I can quite happily look at that British pound chart and say, that's weak, that's negative. Okay, and all for the last 2 weeks, if you've been in the trading room with me or you've seen me trading, I was trying to short this instrument. We had one very big trade on this. I think you saw it, didn't you, Joseph? You saw that big, massive trade coming down, and I just chased the trade all the way down, and it moved so quickly. This is what Marcus was saying with the dome. You had to be very nimble. I didn't even have the trading stop. I should have, because it moved really quick. I was able to just click and move it down and catch the trade. In gold and crude oil, we're going to talk to Abraham shortly about his experience, because he's, as you know, probably many of you will know, Abraham runs to live trading where he looks at crude oil a lot. But doesn't that move damn quick sometimes when it's like, if you're not on your game, you can miss a really big move. Or you can be, if you're already in the market, you can be on the wrong side of it as well. So the trap up move is a very important principle. And as we look what the pound's doing at the moment, there's definitely some support on the daily, but then look at, you can see over here where the weakness is, and that's why it's gone sideways today. This is what I'm expecting to happen for this next week, is a retest of this low, okay? Because there's still a lot of supply present in this market. So we have to wait. Now we've just had an alert come in on the NASDAQ. Okay, so we'll have a look at it. Now first thing I do, right, I'm going to reset the scanner so that it's active again. Now what I do, if I left click on this, it's going to bring up the actual scanner, which I'll just move onto the screen so you can see it. Okay, so I've got a test. We know tests happen on down bars. We know that we've got a strong uptrend on the weekly, but I'll ask you all a question. We have an alert, yes. Would you say, based on what I've shown you so far, that to the trade, to the long side, short side, or no trade right now? No, there's no trade there right now. I would not trade, even though it's given me a test. And you can see, if you look at the top here, when I highlight, okay, these indicators, you can see that's my favorite indicator, by the way, the test in a rising market. Okay, but I would not want to trade that right now. A, because it's closed anyway, or closing. B, that signal, especially the test in a rising market or no supply, is much stronger when everything else is green, which makes total sense, right? Because it's measuring the trend. So this is all Wyckofffian's work. It's Wyckoff through and through. It's looking at trend alignment. It's looking at unusually high volume. It's looking at low volume in the same price levels. And then it's saying to you, okay, everything's aligned. There's a green indicator on a 5-minute chart, and then it's down to you to take the trade and make the decision and manage the trade. We haven't yet developed a system that manages the whole trade yet. But as Marcus has already shown us, with the Infinity platform, it's fairly straightforward. You can set your bracket orders. You can set your profit targets. I personally don't set profit targets. I like to chase the market. So now we want to reset this. And imagine this is all running live now. We're just going to come across here, just uncheck it. It strikes a line through it to say this is no longer being scanned, right? Now you don't want to miss the trade, so you right-click, you restore it, you're scanning again. Now in a very busy market, right, which today was not that busy, which happens, we got one trade off. But in a very busy market, it has happened that 7 or 8 of these can go off at once. Which happens. I mean, it did what you said the other night. It jumps out at you. I've had 7 go off at once. When that happens, my first rule is this. I go for the one where the trend alignment is the strongest. So for instance here on the DAX, which is not running now, but look, green, 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 green. If that was green and it's all flashing, warning me that there's a test that's appeared, then that's the one I'm going to want to go and trade. But it does happen, I will be honest with you. You might get to a situation where you've got 7 or 8 things happening at once. Don't panic and don't rush and try and get into every trade. My preference has been to take 1, possibly 2 positions in the market once it's identified and then manage those through, right? You know, you don't want to be in 7 or 8 trades at a time. Do you remember that trade you took in Australia where you let it swing and it started off at like $300 and then it started to build and build, and every time you said, I'm just going to leave it now because you got your stop in and you just left it. And every time it came down, tested. And this is what this is looking for. Similar things, tested a rising markets. So, summary on pound is definitely, that's a weak chart. There's weakness all over it. We've got weakness on the daily chart. The 4-hour chart, again, this is the reason this is going sideways. But notice something, and I'll get Gary to explain this a little bit. The shortening of the thrust. We didn't really talk about the thrust, as Wyckoff calls it. That's where you get this big surge or narrow. So how important do you think it is to look for those narrow thrust bars on really big volume?
Oh, yeah, I mean, they're crucial.
Like these?
Yeah, we look for shortening of the thrust all the time. And I look for it both in the price bars and in the waves that I showed you a little bit about earlier. Remember, what you're basically doing, what Wyckoff said is that you want to be reading the market by its own actions, right? So that's what we're doing. We're looking at the story of either supply. The market moves only on supply or demand, nothing else. Nothing else. News can affect it, certainly, but that's not going to sustain it. Unless maybe Trump gets elected. Just joking. Could be so. But part of reading the market by its own action is looking for the shortening of the thrust in both the waves and in the price bars. The waves begin to give you the bigger picture in the background. The price bars should get your ears perked up when you start to see shortening of the thrust, because we're getting close potentially to an entry point. Or if you're long, or if you're in a trade and you start to see shortening of the thrust and it's coming in at a known supply level, say you're long, then your ears got to perk up and say, okay, I'm going to start to get ready to get out of this trade. Maybe I bring my stop up, maybe I get out altogether, maybe I scale out. Again, think that stuff through before you're in the trade. Don't be doing that in the middle of the trade. Have that all laid out in your plan ahead of time.
Definitely.
Are you drawing the waves in by hand or are you using the wascomate for that?
I do it by hand. I use David's indicator for the volume, but I just do it all. Now at this point I can eyeball it and see it. But I've always done it by hand.
Yeah.
There's something to say. I mean, Tom, I was going to bring this up earlier. Tom charted by hand. And I saw when I was in Worthing at his house, he's got this, how many feet is it? 7 or 8?
7-foot ruler. Yeah.
7-foot ruler, because he would chart these, he'd make these charts by hand, and they would go all the way across the wall. And then he'd use the 7-foot ruler for trend lines and stuff. When you do things by hand like that, it's a very good thing to do. Today we have, I wouldn't spend a lot of time on it, but I certainly would think about charting a little bit by hand. You get a really good feel for the market when you do that. Somebody else have a question? No? Okay. What else did you want to look at, Gavin?
Yeah, let's go just quickly go to silver for a second.
Silver.
And then I'll bring Abraham up and we'll look at crude oil, because I know I have several of you.
I don't even know.
How many of you here trade crude oil? Just put your hand up. I need a couple of you. Good. Yeah, so we'll look at crude.
You'll have to find silver. I don't know what
Yeah,
the symbol is. For
silver.
that.
There it is.
That's
Up the
SI
top.
usually, right? Oh, it's on the top. Okay.
Yeah. Now this is even more interesting. So this is silver, and you're going to notice a very big similarity between gold and silver, because they both do the same thing. But look up here. Look what's going on. There's your climactic action. You don't see that signal very often. Right next door to it here, no demand, right? And then over here, the upthrust. Now you can't get a better chart to show people what to look for. Yeah?
I'd be in that if that were the S&P, is that the unit on the no demand.
Yeah, well, they're not, yeah.
I don't trade this market, but if that was the market I was trading for, I wouldn't hesitate.
Well, on the weekly chart, if you break it down and go to the 4-hour chart, where it started to break down, all your principles that we've taught you today, right, and over the period of the 3 sessions that we've done, they're all evident. If what I've said to people is you've got to believe, haven't you?
Yeah, let me make a point here.
Yeah, okay.
When the scanner comes up and shows you that you've got mostly green there and a trade potential is setting up, it's a good opportunity for you to go in and look first at whatever the higher time frame is. If it's say the weekly chart, why is it bullish or bearish? Drill down next then to the daily and the 4-hour chart and start to see this stuff and start to piece together for yourself the multiple time frame story of supply or demand in the market. And then when you're ready to trigger the trade, you know why you're going to take that trade because you've assessed the background. So it's not the number of bars, 137 and a half bars. It has nothing to do with that. It has everything to do with looking at the market and understanding what's going on.
Yeah. Laura, can I make a point?
Yeah, the one thing that really strikes me here is, you get this, you don't get the dome, instead you get an M. So you have it here.
Double top almost, yeah.
Yeah, and you have this, and then you have a failed test. So that's what I was saying to you guys before. If you have a failed test in a down market, it's confirming weakness.
Yeah, well, this beautiful example right there. You can highlight that, just left click on it, and it should come up as a test. Yeah, let me do it. So that's test after, yeah.
Right.
And there, the next one failed.
And the next one failed, but
Yeah.
and then here, but this would be, this is your up thrust, right? So here's your background, and I would say, okay, here's your, your rising in prices, and you come down. Here's your effort versus result, and then it tries, you get a failed confirmation. So if you were in a short, this is confirmation all along, but
Yeah.
and then you get this, I would have gone in here, or I would have let this take me in down here.
Yeah, and it's got another way. It's got another leg to go as well, because
Okay.
all it's done is consolidated because of these bars here. But notice the narrowing of the thrusts, narrowing of the spreads, very, very narrow on that one. Yeah, so that's silver. Let's bring up my good friend Abraham here. He's been sitting patiently. I don't really need to. You've probably been talking to Abraham, so I don't think I need to introduce you. But for those of you on the internet, Abraham Cecina's come up from San Diego, runs a live trading room. But I wanted to bring Abraham here really because he's been on a journey using volume spread analysis that's led him to, basically become part of the team, and very shortly, I hoped, when he got his qualifications, to become a fund manager for us and be part of our fund. That will be the long-term goal. But he's also been through the journey of going through mentorship courses, coming to events, right? You've done pretty much everything that, yeah, pretty much. So he was a customer who's now come and joined us. So what I've asked him to do is just share with you some of his thoughts, because I think it's a good way to sort of roll over. And then what we'll do is we'll go and do some analysis together on crude oil. So Abraham, over to you.